So I'm going to give a little bit of background on my firm and on the angel group that I started, and particularly how we work with women, and share a little bit about what I've learned about raising capital from being on the other side of the table. My background is as a serial entrepreneur. My parents are both entrepreneurs. My mom is a choreographer. I literally grew up being diapered on the dance floor, so I relate to that. Didn't really translate to too much skill in the way of movement with the rhythm, but it did build a certain obsessiveness about fitness and about body language. So I definitely share that and appreciate your points, and I've already taken notes from my wife. I have 3 daughters. My home is 80% female, so that's one of the reasons I particularly relate to Womensphere's mission. So my day job is I'm a partner at FF Venture Capital. We are the largest or second largest seed stage VC in the country by headcount. We have 23 full-time employees in Midtown Manhattan and in New Jersey. We have a couple of open jobs now for a junior technologist and a junior accountant, so send in your resumes. And we invest across the country. We also have investments in Canada, Israel, UK, and Holland. The bias is a little bit East Coast, but we are broad in our coverage. And we invest in anything excluding life sciences, which we don't understand. We primarily invest in software-related companies, but there's certainly many hardware companies as well. So in general, the bias at FF Venture Capital is to invest in sectors that are not hot, that other people are not paying attention to. The VC industry is a groupthink industry, just like the investing industry tends towards groupthink. So we've seen a dynamic in our industry where prominent VCs will say, if you come in with a hoodie and you're a CS grad and you went to a top-tier school and you look like Mark Zuckerberg, you are more likely to get funded. So this will get you fired, right, if you work for a compliance-sensitive Fortune 500 company, if you say that. Second of all, we think it's bad business to screen people by whether they wear a hoodie or not or other less relevant variables. So we don't specifically seek out women, we don't specifically seek out minorities, but empirically we're shooting way above the norm in our industry for investing in women co-founders and or CEOs. And in 2 cases, actually, the company started with male CEOs and they got supplanted by female CEOs who are doing a better job in all those instances. So 13% of our portfolio since we launched our second fund in 2010, which is our first real institutional fund, 13% of our companies have women co-founders and or CEOs. The industry norm among tech startups is about 5%. And that is not because we're seeking out women. It's because we're trying to just apply a neutral filter of what are great companies that we can invest in, and we think that will produce better returns for investors. Those of you who are familiar with the VC industry may have already done the math in your head. We're a small fund. We have 85 million AUM, and we have 23 employees, right? So most people can't afford that because the management fees on that size of fund don't support that infrastructure. We're fortunate to have had some success in investing since 1999, and our strategy as a firm is to reinvest past success, past economics, into our infrastructure, and thereby increase the odds that our companies are successful. We have full-time staff to support our companies in accounting, in financial modeling, in PR, in recruiting, all the other functions that every startup has to execute on in order to become a success. And that strategy seems to have worked out well for us so far. The other hat I wear is I'm founder and chair emeritus of Harvard Business School Alumni Angels of New York. We are the second largest angel group in New York. Golden Seeds, which is a women-focused group, is number 1, but we are going to supplant them within, I anticipate, 2 or 3 months. Give us a little time to recruit a few more people. We're not competitive at all. Our members are all Harvard affiliates, meaning not just HBS, but we invest in companies regardless of which school the people went to. If anything, there's a bias against the HBS people because of the ego problem. In creating this angel group, I had an interesting design problem. Most investment organizations specialize by stage, by industry, and or by geography. But our angel group is very diverse on our measures of the word diverse. We have a lot more women than most angel groups. We have people who come from all the major industries in New York, as well as minor industries. So obviously lots of finance and real estate people, but we have people from fashion and medical devices and other sectors as well. And so it didn't make sense for us to specialize in the way a normal investment organization specializes. But I do believe that you will have more success as an investor if you articulate an origination strategy. You, as an entrepreneur, spend a lot of time thinking, how do I get money? We, as investors, spend a lot of time, how do we find the person in whom we can invest our capital? So we surveyed our members, and we said, what should we do? Should we invest in green tech? Should we invest in socially responsible enterprises, in creating jobs in the inner city? What should be the focus of Harvard Business School Angels? And our members, our Harvard Business School alumni, said, returns. I'm not getting returns on my 401k or my hedge fund, right? I'm paying a lot in fees. I'm getting 2%. Where can I get some returns? So we have looked at 12 different academic studies of angel investing, showing median returns of angel investors are between 18% and 54%. So it's the highest returning asset class I know. Of course, this is offset by the fact that it's highly illiquid and you are likely to lose all your money in most of your investments. But we think it's a really attractive asset class. We started an initiative focused on women and minority entrepreneurs for the same reason that I identified earlier for FFVC, because we find that our industry tends towards groupthink, screens entrepreneurs on irrelevant metrics, and we thought this will give us a chance to identify entrepreneurs who other investors are not necessarily seeing because of the blinders, and will also help us find people who are selling to the emerging domestic market, which for those not in the investment world is a euphemism for the part of America that doesn't look like what America used to look like. So we launched that as a JV with the National Association of Investment Companies about now 2 years ago, and that's created a whole new set of entrepreneurs coming to us, a good number of which have received funding. We've also held a series of joint pitch nights with other affiliate groups. So we did one with the Harvard Business School African American Alumni Association. This coming Monday, we have one with the Harvard Business School Latino Alumni Association. We have one coming up with a women's group, et cetera. And the intent is each of these affinity groups have members who are looking for capital. We should get to know them. And hopefully some chunk of their members will join our group. So I want to share one particular success story about raising capital, which reveals a number of our themes. One of our women-led companies is Interaxon. This is a hardware company out of Toronto led by Ariel Garten, and they make a brain-sensing headset. Some of you may have done a sleep study. Maybe you had to put a little stuff on your head, maybe shave your hair a little bit to read your brain waves. So this is a headset that looks like what she's wearing in the photo that reads your brain waves and evaluates what state you're in. So are you meditating? Are you sleeping? Are you anxious? And gives you live feedback. The initial use cases are meditation, $2 billion a year industry, and ADHD treatment. So the company was looking for capital, like almost every other entrepreneur, and they went on to Indiegogo, which is another FF portfolio company whose co-founder, Danae Ringelman, was honored by Womensphere not long ago. And they launched a crowdfunding campaign, and they raised almost $300K. And that was in pre-orders, so that's the best type of dollars, right? It's clients, it's not people like me who want some of your equity. And that validated the market and helped them to raise more money because we as an investor could say, oh, you don't even have a product, and you got 287K worth of people to give you money on the promise, which isn't even legally binding, that you will ship them a product. Okay, I think you validated that there's a market demand. So we think crowdfunding is a really interesting tool to better validate your market. And it's worth noting that women are significantly more successful on crowdfunding sites than men are. There are a number of theories for that, but the one that makes the most sense to me is fewer women do it. So the ones that do it tend to have better quality products, and therefore they're more likely to actually raise money for their projects. So Annalise asked me to speak a little bit about tips for raising capital. So there's an endless amount of tips out there on the web. So I only wanted to give you things you couldn't find on Google. So I'm going to share with you the tests that VCs are putting you through that you don't know and how to hack the tests. Part of the problem in my industry is noise. We get 2,000 companies a year. We have a phone call with about 1,000. We give term sheets to about 20. We do due diligence. We end up investing in 12 to 15. So just getting the attention of a VC, us, but more generically the VC industry, is difficult. And so VCs are forced to create a whole set of tests. Although my points are focused on raising capital, you are always being tested. If you're looking for a job, you're looking to get published, whatever your aspiration is, you are being tested. So here are the tests and here are ways to hack it. First test is I am often in a situation where I meet an entrepreneur and I hear their pitch and I say, okay, that's interesting. I'd really like to know more about X. Can you send me your deck and go in deeper into X? And they send me the deck and they don't go into X, right? So that's a fail. When I had my first job at Bear Stearns, I was told, always walk around with a notepad because your bosses will say to you to do stuff, and you need to write it down and do it, or you're not competent. And now we all have notepads, right? They're called smartphones. So if you just actually do what the person requests you to do, that immediately puts you in top 10%. Second thing is to actually do it. You would be amazed at the number of people I meet who say, oh, I'll email you the plan. These are people who want money from me, right? I'll email you the plan. I'll email you the contact information. I would say the rate of people actually doing that is on the order of 15%, right? So this is just embarrassing to me that these folks are out there trying to run a company and they can't actually execute on this very basic promise. Am I going to trust them to execute on the promise of they're going to build a real company? Another thing that I screen for is for people who track their contacts. One of my standard interview questions for salespeople, business development people is how many people are in your contact database and what technology do you use to track that? The wrong answer is my phone. It's automatically recorded in an address book, right? The correct answer is you spend, probably most of you, a lot of money on tuition. Some of you spend a lot of money on this conference. You're meeting a lot of people. The whole point is to meet people. If you don't have some mechanism for tracking them and following up on them, you just wasted money. Right? So why should I trust you to actually manage carefully the money I'm about to give you if you can't even manage the $100,000 you spend on your education or the $1,000 or hopefully a greater amount that you spend on this conference for Annalisa's sake? Two other points is actually double check your work. We get pitches all the time that have typos, that have errors. And I don't care if you're coming from offshore, you're not a native speaker of English, that is not an excuse. Right? If you want to sell to the English-speaking market, which is, of course, the largest market for most businesses, right? So get a native speaker to edit it. It's not an excuse that that's not your mother tongue. And I say that as someone married to a Russian. Lastly is follow the instructions. On our website, we have a page which says, here is how to pitch a VC, generically, not just our firm. And has a checklist. And it says, don't name your file pitch.ppt, because everyone else does that, right? It will get confused with other people called pitch.ppt, call it your company, and then 2014-09-29, right? That would be logical and shows you're doing version tracking. And most pitches we get do not follow the instructions. We are trying to make your job easier. We are trying to enhance your odds of success. If you don't read the instructions, that doesn't bode well for your ability to read the instructions when we try and support you in raising your next round, or how to recruit that star engineer, or the other things you're going to have to do. One of the amazing things about the internet is we have all the world's knowledge on a phone in our pocket, but it's totally useless if you don't actually read it and act on it. So we're looking for that when we look for people in whom to invest our money. So I look forward to your questions afterward and hope to see some of you tomorrow. Thanks.